Welcome to the latest video from the North Eastern Yorkshire Business Network on LinkedIn. Today we're talking about finance for business, particularly in the north of England. There's a great new book being written. There it is. It's called Shaking the Money Tree, and it's by the banker Craig Iley. He's joining me on this video, as is Ian McElroy from Tier 1 Capital. Craig first. I know you've retired now, but I've been reading this book. It's very readable, considering the subject is potentially dry, shaking the money tree. It's all about the banking sector and how it isn't automatically fit for business. What caused you to write the book, Craig?
Well, to be honest, Graham, I think there's a bit of a crisis developing in business finance that's going largely unnoticed, and that is that businesses are gradually being excluded from mainstream banking. Now, it's impossible to change a system that you know nothing about, and I really wanted to lift a lid and give people the tools to understand how it works and to give them some ideas about where they can actually make a difference if they wish to.
Well, I've been reading the book. I've got my tabs here. There's some points that I would be fascinated to get your comments on. One of the things is that there's not as much competition in banking as there used to be for businesses, and it seems it's very, very complex, obviously, to establish a bank. It says here an average novel runs to between 70 and 80,000 words, but by the time you've finished writing the regulated business plan for a bank, you'll be at 500,000 words. Obviously, regulation seems to be oppressive to the banking entrepreneur.
Yeah, I wouldn't call it oppressive, Graham. I think the regulatory piece is very, very important. And actually, the regulator is a bank's best friend in many ways once they are established. Because if you think about any other business, your business, for example, it's a huge barrier to entry. And once you're on the inside of that, it affords you great protection. But it is a very complicated process. It's a long process. And the main problem that it actually yields being so long is the fact that it's very difficult to raise finance to build a bank because it's such an expensive undertaking.
You also talk about what you describe as the hubris of centralization. The hubris always astounds me, you say. A group of, let's say, 25 or 50 people in a large organisation employing tens of thousands, and they're setting the direction in a command and control way. What do you mean?
Well, I think it's very obvious in large organisations that what we've seen over the last 2 decades at least is pulling more and more power and authority and decision-making responsibility to the centre. I don't think that serves customers well. I think in the digital world, it's much easier to have a decentralised model and achieve much greater results from that. And I do use some examples in the book. But when I talk about the hubris, the thing that really is quite annoying is the fact that you may have a relatively small number of people on the board who, for example, earn tens of millions of pounds in salaries and bonuses, and yet the responsibility that should go alongside that, unfortunately, doesn't seem to be there for me. These people are responsible for their impact on a lot of other lives, and yet they're very keen to deflect criticism.
Now, you were involved in the team that established a challenger bank, Atom Bank, and there's a whole chapter in Shaking the Money Tree about the establishment of Atom Bank, and it is fascinating reading. I'm not going to spoil it for people who might want to read it, but I was also interested in just a small section where you broke down the IT system and explained it is basically any bank now has to have an IT system that works in 3 layers, and it was quite obvious that the IT system is at the heart of any bank, and that's where they need to get it right. And yet you see these IT failures, maybe not so recently, but you've seen a lot of them over the last few years with banks. What are the 3 sections of an IT system that works in a bank?
Well, basically, there are 3 parts to the IT layer. There's your UX or user experience layer. That's effectively where the rubber hits the road and where you interact with your clients, and that's very important if you either don't have branches or if you're an existing bank and you're looking to reduce face-to-face contact. It's very important to create a good user experience. The second layer is probably the most important layer in terms of the data, and that's what's called the middleware layer. And that's where a lot of the sexy stuff is done in terms of manipulating data, understanding data sets, understanding customer behaviours, doing all your fraud and credit checks and so on. And then the third level is effectively your hall of records, which is effectively where the customer's account sits. And you want to do as little as possible in that layer, really, when it comes to processing, because obviously the more work that is done in that layer, the more possibility there are for errors.
I remember being an early investor, or a saver rather, with Atom Bank. I still am. And they have your picture on your iPhone, they scan your face. There's a lot of gizmos that make it fun. And the customer experience and the marketing and the brand all came to mix. And obviously that's an important component of getting good market share.
It is, and I think the two things that are important, really. I mean, obviously accuracy, you take that as for granted. But one is, as I said, creating an interesting user experience, not just for people of our generation, but the younger generation coming through, that they're looking for ever more innovative ways to interact with businesses. And the other reason, of course, for IT is that banking is very much a commodity business, and therefore unit costs are important. So the IT is very important for driving an efficient operation as well.
Let's bring in Ian McElroy from Tier 1 Capital, CEO. Ian, we've talked about banks there. There are other ways of raising finance for business, though. How can an organisation like yours, which is different, help with services like direct lending?
Hi, Graham. Thank you. And I think Craig has hit the nail on the head in some respects when he talks about the restrictions in the banks and the commoditisation of what the banks have to do. And that's often due to these large organisations having to have one set of policies, one set of processes that they all have to adhere to. I think the recent growth in alternative lending has come from the need to have decentralisation for borrowers and a more personal approach. And that's certainly something that we're approaching from our side. Direct lending in particular is filling a gap. This is a concept where we match up high net worth clients or high net worth lenders with those borrowers who can't get access to capital from the more traditional lenders. And we've seen a huge increase in demand for direct lending. And this is another method. I mean, very rarely now do we, certainly for business owners in particular, do we see the banks providing the finance they need. Now, that's a great opportunity for alternative lenders like us. And I think one of the biggest things we benefit from is that decentralized approach where we are in the region. We very much promote lending in the Northeast, and we can take a very personal and knowledgeable approach to that, Graham.
You also drill down to the entrepreneur's own wealth and maybe explain to him or her that they have funds they maybe didn't realise.
Yes, and it's the same concept, and I'm having lots of conversations at the moment, I'm sure Craig is as well, with people, friends, business owners who need to access capital, particularly during the COVID times where liquidity is in high demand. And there's very few places for business owners to go now. Very rarely do we hear positive success stories from business owners looking to access finance from their banks. I think if you're a large, successful business, a big business with strong reputation and experience, you can get money from the bank all day long. But if you're a smaller owner-managed business, it's difficult to find the finance. And one of the things we've done with a lot of our clients of late, or certainly recommendations we've made and discussions we've had, is around unlocking pension funds.
Okay, I'm going to give the last word to Craig. One of your chapters is headed Why Universal Banks Don't Work for Business. In a few seconds, why?
Well, Ian's already touched on it, really. The key is liquidity. Now, two things that we need banks for: they can expand the money supply and they recycle liquidity. That's the purpose of a bank. It doesn't work. The reason it doesn't work for business is because there's two decisions that need to be made by management. The first is, where do they invest in their own systems and processes? And because 95% of their customers are retail customers, and for many other reasons, it's much more efficient to invest in that side of the business. You don't then build a separate set of systems for SME customers. They effectively get shoehorned into systems that don't work for them. And the second one is, when it comes to allocating capital, it's less capital efficient to lend to businesses than it is to individuals. So effectively what you've got is two diametrically opposed business models effectively trying to be shoehorned into one business. And businesses always suffer as a result.
Well, it's good to see there are alternatives out there. If you want to find out more, buy Craig's book, Shaking the Money Tree. Ian, Craig, thank you for talking to us today.
Thank you.
Thanks, guys. Thanks, Ian.